Economic inequality is a hot-button issue right now. Let's talk about what the underlying causes might be. Before we get into this chart, I want to differentiate between income inequality, which is what you will hear people refer to most often, and wealth inequality. Income refers to what you take in a year, your cash flow, your salary usually, versus wealth, which refers to what you own, what your assets are. Now, three economists, Kuhn, Schuler, and Steins, recently studied these two things, income inequality and wealth inequality. And what they found is that income inequality began to diverge back in the 1970s, versus wealth only began to diverge more recently in the 2000s. So why that might be has to do with this chart. The orange line represents percentage of your portfolio allocated to real estate. The green line represents percentage of your portfolio allocated to financial investments. So this can be equity, like the stock markets, it could be bonds, it could be any financial investment. So why do we have two of each line? Well, the answer is that we have both the top 10% as well as the bottom percent represented here. As you can see from the lines I just drew, the top 10% of folks have a much larger percentage of their portfolio allocated to financial investments and a smaller allocation to real estate investments. The bottom 50%, on the other hand, have a much higher percentage of their wealth dedicated to real estate and a much lower percentage dedicated to financial investments. Now, this is usually because people own a home. That's usually their biggest asset. Well, what happened after the financial crisis is really the key to why wealth began to diverge. This isn't an exact replica, but basically what happened is that housing markets, after collapsing during the financial crisis, took a lot longer to catch up than that of financial markets. When housing takes longer to catch up and a bigger percentage of your portfolio is allocated to housing, that means your wealth is going to grow at a slower pace than that of someone that has a higher percentage dedicated to financial investments when those markets took off much faster. The reason we're talking about this right now is that in the upcoming election, you're likely to hear candidates talk about income inequality. So just keep this in mind the next time you're at the ballot box.